Let me start now. Can share it, right? Okay. We'll start with today. What we are going to discuss basically the impact on present and future environmental factors to credit. So we are try to cover today the economic and the regulatory impact. Okay. Now I think to get a better get an idea about this aspect, the economic aspect, how it impact your credit business. Let me just briefly share with you some of the areas, right? Some of the things what we have quoted from the World Bank and IMF. If you look at that October figure, so the economy, the world economy is in, the last year, basically a minus one, is minus 3.1. Then the growth projection as per the IMF. Now you noted as in 2019, we have a positive growth rate in world economy, that is 2.9, right? Then in 2020, so we have experienced, as everybody well aware, and it was minus 3.1. And in 2021, in the growth projection in 2021 is 5.9. And then again, maybe on 2022 is 4.9. That's the global outlook, right? So that means in the global economy, the economy is recovering now. Now global, now economy recovering, you may have L shape, V shape, right? W shape, right? And L shape continuously, like that. There are many shapes they talk about of economic recovery. But as far as the World Bank is concerned, despite the fact of 2.9 in 2019, but we noted that 2021 is a 5.9. So there may be a huge potential in the growth in the world, right? Because of we had a bad time, so we try to double it. It's almost the World Bank expecting, the IMF is expecting the world to grow 5.9. So that's the world scenario. Now if you look at it in something we took from 2020 figure, right? Now what is 2020 figure for Sri Lanka? Of course, our GDP has gone to minus 3.6, and then we have a lot of bad times, the Sri Lankan economy, right? So if you look at it, our trade deficit increase, right? Then of course our workers remittances, okay, to some extent, as even though we expected in a very low level of workers remittances, but workers remittances also comparatively okay. And I think that's, of course, there are some points you have to make a note of it, that policy rates, SRR rate, bank rate, right, concessional loan rate, right? So there may be a reduction. We will discuss how these impact on our credit businesses later on, right? And overall, you noted that the Sri Lankan economy in 2020, of course, is a minus one, right? And if you really look at it, the economy at glance, as at first quarter 2021, basically, and we are basically expected 4.2, right? For 4.2, but then in second quarter, and we had a huge economic growth around 12%, so 4.1% overall, and that is the informations what we have in our rate. But the present new governor mentioned that so economic growth in Sri Lanka maybe reach end of the year is 5%. But if you look at the recent release by the Fitch Rating, they said earlier they forecasted Sri Lankan growth rate is around 3.8%, but now according to the latest evaluation, they have further reduced from 3.8 to 3.3. Now we have a different figures, right? Governor is selling 5%. Earlier, some people said around 4.5%. Now Fish said earlier 3.8%. Now they are telling, yesterday they're telling we may achieve only 3.3%. Okay, so that of course something, and we may need to look at it in a more broader sense, right? Why we need to, because we need to understand the economy. That's what we can consider about how the economic impacted to your impacted to our credit business, right? And also, our foreign sovereign debt obligation also not good. And it was estimated around 26 billion US dollar, right? It's not a calculator cost that 26 billion US dollars need to pay from 2022 to 2026. So within next 4 years, we need to oblige 26 billion US dollars. Now within that also, now around 1.5 billion, right? So 500 million, so we need to settle in early January. So therefore 5 billion, 1 billion again you need to settle in July. So we, in that sense, we are in a very in difficult situation. So we need to oblige our recovery. So this is the GDP growth rate, right? If you look at it from the Sri Lankan from 2015, right, from first second chord, and you noted that there's an estimated that in 2021 second quarter we had around 12% growth, right? Something that may be the reason why the governor said maybe achieved 5.3, but overall different estimations are there. Okay, this is our economic situation, right? I just briefly touch on that. Right, now let's look at it. So what drives the economic engine, right? If you want to improve our economy, so what drive? So one is spending, that is money and credit, right? Now the credit expansion usually boosts the economic growth. Credit contraction reduce the economic growth. So therefore, to support the economic growth, right? So credit expansion has to play an important role, right? Okay, so you understood that. So like earlier we discussed, last week we discussed, okay, how organizations asset growing, because the credit also facilitate the individual organization assets to grow. Likewise, right, countries' economies to go up, so credit play an important role, right? Okay, that is what you need to understand. So if you look at it from the credit as a percentage of GDP, right, which is an indicator of financial deepening of the economy, to what extent the financial sector involving in the economy, you can say the percentage of GDP. Now, higher credit to GDP indicates the aggressive and active participation in the banking sector, right, in the real economy, right? So the lower number shows the need for more formal credit, right? So that shows so contribution made by the credit as a percentages of the GDP. Now, how the credit improved our GDP of the country, right? Now, from that the chart, you noted that some of the information about the credit trend, right? Now, how credit increased to some extent, right? Different level, and you noted that the private credit and the credit, right? You get an idea about how. If you get the more idea on this, now if you look at the Sri Lankan credit growth continue to improve for the last so many years. If you noted that total loans and advances, as I told you, is 10.2 trillion, and then this is in July figure, right? And increase from 6.2 to 17%. So usually what is our growth rate of credit? How much you think? Is around 16 to 17%. So this is our normal growth rate, credit growth rate, right? Now think on that. Now suppose if you want to set a target for your bank for credit growth, right? Now say for an example, you need to target your credit growth. So you need to at least to improve by how much in order to maintain your present market share in your credit business. You need to maintain at least how much, what percentage? You need to maintain at least 16 to 17% you need to maintain, right? Otherwise you are losing your market share. If you want to improve, so you have to put your growth rate more than 7%. That is the important things you will need to look at it, right? So this, you know, you have to get an idea about how your credit is contributing to the economy. And then you also may look at it, some of the credit growth informations about given to private and the government, and the credit supply survey. And also, so there is a demand for loans but still willingness to lend. I will tell you some story about these things little later on, right? And then these figures will basically try to explain to you how the credit is basically taking place. Right, and there's another way of look at it, the credit, right? The demand for loans by category and willingness to lend by category. So there are, these are indicators are available in the central bank. So you look at it overall in outlook in 21 quarter 3, and then you look at it in 2021 first quarter, second quarter, third quarter, right? Now you noted that demands is increased in the, especially in the first quarter, right? But second quarter, third quarter, it has come a little less, right? Okay. So then, now what I want to highlight all these things, when you compare with Sri Lanka's contribution credit to the GDP around 20 or 24%, 25, 6, maximum 24, 25%, right? So when you look at the Sri Lanka's private sector credit to GDP is relatively low when you are compared with other countries, right? Now it is on 52 given, but it is now 48% or something, right? Now, if you really look at it, the other countries like Thailand, Malaysia, Vietnam, you know how much they have contributed to GDP, right? It's around more than 113 is from Thailand, right? Thailand figure is 113, more than 100%. Therefore, huge percentage contributed by those credit to the GDP. In our countries, around 48, around 50% contributing. That is more you need to add. So that's, you get an idea if you have an economy, right? But how the economy factors can be improved by credit. So credit have to play a big role for your organization as well as for your what? As for your country as well. Right. Now let's look at it another important thing. Now you look at it from this chart, the monthly import performances, monthly import indexes. Now you noted that what the things you can get it from this report, right? Now you can get an idea about this information. Now if you improve the import mean, so import mean what? You need to open a LC or you need to go with some methodology. So import reduction means, so your business going to affected. So your import restriction mean, if you look at 2021 is comparatively less. But despite the fact of these factors, you see 2021 June figure has increased. That is why now we have all the restriction, right? Now we have all the restriction. There are some import restriction. We have a dollar issues, right? Now understand this concept, right? Now look at it. We have a dollar issues. We have a lot of restrictions about the imports, right? Despite the fact of that, the import performance will increase. How it happened? So that is the credit is contributing to that also. I will explain to you later on. Right? You clear? Right? Okay? Right. So how it happened? The import improved because the monetary, I mean the import value has gone up. How it gone up? So we will discuss after our detailed analysis, right? Okay. So now, okay. So how Sri Lankan monetary policy instrument used for the credit functions? You know, the monetary policy operates now primarily by in influencing the cost and availability of money, right? Hence, the central bank steer the market interest rate and credit availability in the economy by employing several monetary policy tools. I think you may be aware. What are the monetary policy instruments available to central bank to control the liquidity or the credit availability in the market, right? Now you look at it, we have a two type of policy instrument, right? You look at it, the two type of policy instrument, right? One is we call the quantitative instrument. What are these quantitative instrument, right? For example, open market operations or policy interest rate, bank rates, right? Then statutory reserve ratio as a money multiplier, right? These are, we call them as some sort of the quantitative instruments. Key instruments available, central bank to control the liquid as well as the credit. Now, liquid means credit in the indirectly, right? So the qualitative instrument. What are the qualitative instruments that the central bank they're having? We have a molasses rate, and then we have a margin requirement, we have a credit control, we have a direct controls, and we have some forward guidance, right? Now, let's look at it now. How these policy instrument impacted my credit business, right? Okay, right. These are monetary policy instrument, right, to maintain the economy and the credits in Sri Lanka. So any central bank having these instrument. Now let's look at it, how these policies are basically impacted on our credit businesses. Okay, how these policies we are going to use impacted my credit businesses, right? Let's look at it. Now you noted that we have you know what is basically the two important tool, we call them as the policy interest rates. Now what is the policy interest rate? Okay, what are the policy interest rate? Okay, can you just join with me for the discussion, right? Okay, right. What are the policy instrument available for you to control the money supply and liquidity and credit? What are the main policy instrument? Policy instrument, we call them as, what are the policy instrument, Puta? Right? Uh, Chamika, you raise an hand, but what is that? Chamika? Chamitika, no? Chamika. Right. You want to raise a question? Chamika, you want to ask for a question from me?
No, sir.
Right. I saw a small note with that. Okay, no problem. Right. So then, okay. So, right. What are the policy rates? There are two types of policy rate. One is, we call them as standard deposit facility rate and standard lending facility rates. So the difference between, we call them as interest rate corridor, right? So that is what you call interest rate corridor, right? Are you aware on that, right? Okay. Now, what happened? What central bank has done to these policy rate? Why you use these two policy rate? Now the two policy rates are standing deposit policy rate and standing lending facility rate. We call with this, there's a corridor, right? That means we usually call them as a interest rate corridor, right? Now, what is the prevailing interest rate corridor? What is the present policy rates, deposit
The
facility rate? How much?
4.5%,
4.5%.
4.5 and 5%, 5.5.
I sure. Now, recently they have
Sorry, increased by 0.5%. So it's 5 and
0.5%.
6. Yeah,
Right, 5
5
and
and 6.
6. Right, good. So difference is the corridor. Now, what is the upper limit?
6%.
6%. That means the lending, right? So the lower level is the, we call them as a standing deposit rate. That is the lower level. So the corridor means the difference between these two, right? Now, how can you use this method, this corridor or this policy rate to pump the money to the economy or make it the credit available to the bank? Now, you know, the moment you increase the policy rates, market interest is going up. Then what happened? Uh, right? Then market interest has gone up. Then what happened? Basically, the lending rates is going down, and if you reduce the policy rate, the lending rate has come down. So bank can issue more loans to the customers. That is more credit availability. Now that policy applied by the during have a liquidity issues, have a liquidity problem and the credit issue, the central bank lower their credit. Now in 2019, right? 2019, what is this figure you think? It's basically from 9 to 8%. So lending rate is 9%, 8% is the deposit rate, right? So huge gap. Then again, the 2016, again it has come down because if you have a problem in the market, it's have the credit problem. So banks need to give money, so make it available to release as a form of loans or credit. So therefore, they will arrange it accordingly, right? Now, last year they have reduced the uh, lending deposit rates facilitate remarkably from 9 to 4.5. Huge amount they have released, right? Okay. So how much of money you think were released to the or make available to the bank to release to the market, right? Okay. Now it was estimated that around 200. Okay, I will tell you later on once I explain everything, right? Okay, this is a one method. So therefore, the monetary policy instrument available, you can control the credit market in the country, right? I think now you understand. So how, right, how the policy interest rate determine the availability of liquidity or and the credit in the market. Thereby you increasing and decreasing or you adjusting your corridor, right? You can make it available the credit to the market. Clear? Understood? Right. So there's an impact. Now recently they have increased, that we will discuss. right? Recently from 4 we have reduced to 4.5 to and 5.5. Now recently they have increased to 5 and 6. Okay, right. But they maintained the corridor remain as 1. Now in 1 year, in I can't remember the exact year, they have changed the corridor, right? They have increased the lending but reduced the deposit credit, the down upper flow, right? The gap may be one time 1%, 1.25, 1.5%. The corridor impact, right? Okay. So now I think you have a basic idea about how you are using the policy rates to growth in credit, right? Okay. Then you may also look at it another instrument available for central bank to control the credit in the market using the monetary policy instrument is basically we call them as the open market operation. Now the open market operation mean when there is money is available in the market, little more, what happen? They issue what? They issue treasury bills and treasury bonds, right? So then more you issue the treasury bills and treasury bonds to the market, they will take some money out from the market, right? Okay, so once you issue, they take the money from the market. So therefore, liquidity has come down and the credit availability also come down. Then if you don't have much money, so they whatever they release the treasury bills, right? And so that means so they are basically a lot of monies are available. This is how the open market operation is basically controlling the uh, money in the markets, right? Now the central bank, so they're selling the government securities when the market has some excess liquidity, so therefore absorb the excess liquidity from the banking system. Now mind you, the excess liquidity mean the money available for lending, right? And then the suppose the central bank buy the government security when the market liquidity has a liquidity and shortage, and the money is going to the market, right? This is how open market operates. Then you may have a reserve requirement, right? The reserve requirement that you must be aware what is reserve requirement mean. Basically the money tied up with the central bank, right? Some percentage, so thereby they maintaining certain percentage with the where you won't get any commission, right? So SRR is the percentage of deposits, liabilities of a bank that should be kept in the cash deposits at the central bank. Now that was earlier we had it 4.5, then it reduced to 4 during 2020, and it has come down to 2%, right? Come down to 2%. So that means again, so banks have enough money to lend. So there's a credit availability is there, right? So once you reduce the statutory reserve ratio, that means the banks no need to deposit that money with the central bank. That particular 2% can be released to the market as a credit, right? Now, therefore, that is why the central bank took initiatives during the bad times. Lot of initiatives, money market operation, they are reducing the statutory reserve ratio, right, from 4 to 2%. Then they reduce the policy rates, right? They reduce the policy rate also, and so then also they reducing the moment you reducing the mind you the moment you reducing the policy rates, and automatically the bank rate also comes down. Now one time the bank rate is around 15%. Now you know what is bank rate. So suppose the bank has no money to, I mean, they have a facing a liquidity problem. If the open market operation also not facilitated, or maybe interbank operations not facilitated, they have to go to the bank and ask the money. So that is a lend. We call them as a lend at last resort, right? That is the interest rate they charge. So usually at the moment is around 8.5, right? So okay. So these are the how these are the instrument available, or quantitative instrument available for uh, central bank to monitor the credit availability in the market.
Sir,
Now,
is
yeah,
is that same as the standing lending rate?
yeah. Standing lending rate is
Rate
the
is the last resort.
no.
That's
That is
different.
separate. Now there are two things put up, right? Now policy instrument, we call them as a policy interest rate, right? Now there are bank rate also policy interest rate, right? Right. But there are three type of policy interest rate. One is standard deposit facility rate, SDFR, right? Yeah, bank rate is now 9%, right? Correct. Then the standard lending rate is another one. Then bank rate is another one. There are three rates, right? Now through the policy rates, what happen? You usually, suppose your bank is having the excess fund, what you do, right? So today you find it out, excess fund in your bank. That is why you have a treasury department or asset management or whoever, right? So they excess money, they are deposited with the central bank, right? So you get the interest rate for that for next day. So that interest rate is called what? Standard depositors facility rate, overnight basis. Clear? Right? Suppose if you are facing some liquidity, so you need borrow money. If you having some collateral with you, the treasury bills and treasury bond, you give as a collateral and you takes overnight borrowing, right? Okay, so that you may have a charge. The central bank is charging what rate? Standing facility, so lending facility rate, standard lending facility rate. Suppose your bank has no options. Now, first you are trying to get the money from interbank operations, right? Or may otherwise you try to find it out overnight transaction. Still, if you don't have the money, what you are going to do? You are going for a central bank and asking money. So that is lending at last resort, right? Now, some said, okay, bank rate is 9%. Now, for that you have to pay 9%, right? If you borrow overnight, how much you need to pay? How much? What is-
Lesser than
6%.
9%.
6%.
No, not that. Other one, if you deposit the money with the bank,
6%. 6%.
6%. So what is the difference then?
3%.
3%. That is a premium you have to pay, right? Suppose if you go, that means you are going for a last resort. No, there's no way of you can. So then there's a premium you have to pay for 3%. Understood now, right? The moment you go for the bank rate and borrowing money, central bank come behind you. Why? Why you borrow money? So there's some liquidity management issue in your bank. So they will monitor and come and supervise, and so that is why banks are little reluctant to go for go for bank rate borrowing, right? Okay, so from where the central bank is giving that money? We have, I think you may have learned. Now they have a specific fund. They can give money from that fund to those banks who need the bank rate loans. What is the fund? Any
The
idea?
SRR.
Huh?
SRR,
No,
through
yeah,
SRR.
SRR, yes, right. But not SRR, then they have a new fund now. They have changed the scheme to give loans also in 2014.
Saubhagya, is it?
No. It's a standard fund available with the central bank. That is also collecting from banks. How you call that fund? They have, earlier we had deposit, remember, insurance scheme. Matakai neda? Deposit, are you aware about deposit insurance scheme?
Yes.
Right. So you know how the deposit money is coming to the bank, right? So all the banks, right? The banks who are having the capital adequacy ratio of more than 14%, right? CAR is more than 14%. So from your eligible deposits, right, your banks need to pay as a premium. What percentage? 0.1%, right? 0.1% of the total deposit, eligible deposit. Certain deposit you have to take into account only, right? So eligible account, quarterly you need to pay to the bank as an insurance premium. Now the banks who are having less than capital adequacy, 14% adequacy ratio, they need to pay how much? 0.125%. 0.125% as a eligible deposits. Now say 100 billion of taken into account, 100 billion your deposit, eligible deposits, 100 billion in your bank, right? As an insurance deposit scheme, how much they are getting? From 100 billion, 0.125 into how much? Quarterly. So the 12 into 3. So that is the quantum of premium you need to pay to the central bank as an insurance premium to maintain deposit insurance scheme. It's a compulsory now, no? Right. Then for finance companies, how much? Finance companies need to calculate, right? In there's no any capital adequacy ratio. So whatever the deposit they are having, they have to pay 0.15%. More than that, more than, right, into calculating. That is to be paid in monthly. That has to be paid in monthly, whereas the bank can pay their premium in quarterly, but whereas the finance companies need to pay their premium in monthly basis, right? If you are not pay within 15 days, now say, now this particular quarter is finished today, example. Now within next 15 days, you need to pay the premium. Bank as well as finance companies. Now bank have a grace of 1 quarter. Now the finance companies, every month you need to pay. End of the next 50. Now today is 31st. So 15 before 15 November. So you need to pay the premium amount. Otherwise they will take the penalty from you. Now this is how the premium collected by the central bank from the banks and the financial institution, right, to build up the so-called deposit insurance scheme. Clear now? Right? Understood? Okay, that is something what we are discussing, right? Okay, doesn't matter. That is deposit insurance scheme. Clear? Understood? Clear? This is how. So what are you called the eligible deposits? There are some deposits. Now say deposits your bank is collecting from your maybe other financial institution, maybe other banks, maybe your subsidiaries. You are not taking into account. You're calculating your premium. Then all the government deposits, right, corporations and things like, you are not going to take into account. Then your employees, right, your employees deposits also are not going to take into account in calculating your premium, right? As well as now the loan against deposits, the people have taken loan against the deposits, that also not going to take into account. And your board of directors deposits all up, and dormant account and abandoned properties, right? All the amount you are not going to take into account when you are calculating your premium, right? So this money you will need to send it to the central bank, and that is how your deposit insurance fund created, right? Accumulating the fund. Understood, right? What is the amount now you are going to pay if any finance organizations or any bank cancel their license or terminate their business operation, what is the compensation a customer can get? Come on, how much?
600,000.
Now suppose,
1.1
what is the amount?
million.
Huh?
600,000?
1.1 million.
Not 600, 1.1 million. Now that was increasing March, right? During this March, that was increased from 600 to 1.1 million. Okay, that's 600 there earlier. Now from March this year, it is increased from 600,000 to 1.1 million, right? So you also need to have an idea about how you calculate your deposit insurance scheme and things like that, how why we pay different amount to different. Now all these premium, where this money is collecting, there is a fund established, right? Is what you call deposit insurance scheme. Now what is the, why they have changed in 2014, right? Why they have changed 2014 the name from deposit insurance scheme to deposit insurance and liquidity support scheme. Now that scheme will call deposit insurance and liquidity support scheme, right? Now why they have changed? Now that fund money can be given to the banks who request they are facing some liquidity issues. Got my point? Now what is the rate they are giving now? 9%. So where the money is going to get it from? The insurance fund. How much you think now at the moment is the insurance fund? Roughly, yeah, rough estimate එක කීයක් විතර ඇද්ද කියලා හිතන්න. මේ fund එකේ සල්ලි. So you, and now, and also we have a central bank have a separate team, a separate division to look after this fund. Early it was handled by bank supervision department, but we have now a resolution and resettlement sets department or something. Central bank, they have established a separate department also to maintain this fund, right? So at the moment I think it's around close to 60 billion, I suppose, right? So that's a huge fund, right? So those funds also can be used rather the central bank investing in treasury bills and also, but other than that, these fund can be used to give the liquidity to the bank. Okay, so that is something extra I have explained to you, right? I think now you know the rationale, also the liquid deposit insurance scheme as well, right? I think you got an idea, right? Okay, so you got some idea about that, Puta, right? About how the liquidity scheme, so that funny can give to the bank a rate for this. Okay, now having understood about the policy rates and open market operation and the bank rate, so these are the instrument and SRR they used to I mean, by maintaining these rates, either reducing or increasing, so make the available money for banks to give more credit. Okay, now because of this, right, and the central bank was estimated around 200 billion because of as ample enough money available bank to provide credit. Got my point now? Because these facilities, right, earlier, right, tighten up the money market, the money markets, or the money available in the market. So these money can be used by the bank for lending purposes. So accordingly, they have estimated around 200 billions or so with these changes of the no, I just keep the same slide, right? Okay, now this we make use of the same that 200 billion billion money. So what is central bank and the government expectation? To give all these things form of credit. But really what happened, it was not happened. And finally, recently, and the central bank had found, rather than make use of this money by the banks to give credits to the people, they make use of. What do you think they have done it? Can anybody tell me what they have done for this money? Now, okay, I think you got my point. Now, what I'm telling, because of the releasings of giving lot of maintaining this monetary policy instrument, right? Central bank create environment that bank can give more credit to the people to smoothly run the economy, right? Why they have reduced SRR, right? So why they have reduced the policy rates and smoothing the open market operation? Why they have done all these things? Why they have reduced the bank rates? Why they have done? Make the money available with the banking system for lending purposes. But actually, it's not happened. Rather than they are lending, and finally they have recovered that a lot of banks are using that excess money for what? Huh? What do you think? You think
Investment
the
purpose?
deposits with
Investment purpose?
huh? Not
Yeah,
it's sort of
investment
investment,
purpose?
but not they are not investment. Also, they put the money with the central bank under what under open market operations. Sorry, under policy interest rate. They deposit the money with the central bank. That excess money, they deposit the money with the extra bank and get some repo rates. හරිද තේරුණාද මම කිව්වේ ඒක ඒගොල්ලෝ එන් කරන්නේ නැතුව ඒක කරලා තින්නේ අර ස්ටැම්ප් එක්සස් මනි එක සෙන්ට්‍රල් බැංක් එකේ කොරිඩෝර් එක යූස් කරලා තැම්පත් කරලා එතකොට පර්පස් එක loss නේ so therefore that is what they said. Okay, banks, they are regard the banks also. Banks have not done the job properly, right? There's some small criticism for that. So why they reduce the SRR, why they reduce the policy rate to make the available banks to make you more credit to the customers. So rather than bank doing that credit to the customers, they deposit. Then again they deposit their money using the standard deposit facility rate in the central bank overnight. Okay, so that is the criticism about the central bank, right? Okay, now I think now you have an idea about how you use the monetary policy instrument, right? For the activities, right? Now another important things I just want to tell you. You have noted that it's not moving, no? Okay, right. Now you noted that a moral system. So what is that? What do you mean by central bank using the moral sustain or whatever? So what is that? So that is not a direction per se, and they were requesting from the central by the bank. Okay, try to support the economy to grow, right? So central bank did everything, okay, expecting, okay, the bank to involving in this economic activities by granting loans to the customers, to come out from the economy and all, right? Okay, under this pandemic situation. That's another issue. But in recently, they also request from all the banks. What they request, can anybody tell me? As far as the foreign exchange is concerned, they won't put any condition, but the central bank is requesting something from the bank with regard to exchange rates. What is that? Can anyone contribute? What is central bank request from the bank as far as the exchange rate is concerned? It's a monetary policy. It's a moral system. That is අපි කියනවා මේක සිංහලෙන් ශිෂ්ට ප්‍රයෝග කියලා කාරුණික ඉල්ලීමක් කරනවා මේ මෙහෙම කරන්න කියලා.
Is it capping at 203?
Exactly. Good. Very good. So they requested from the central bank, from the banks, okay, try to maintain what happened? The dollar rate between 200 to 2 points. Right, good, very good answer. But it's not happened. Yes or no? Right? But then the customers are coming and asking open an LC. They want to send the money to their children, and banks not have the money, because usually what happened, the money is borrowing from the central bank, right? Usually if you have the liquidity problem about the foreign exchange, they borrow from the central bank. But now there is no way, because they want to open the LCs and they want to send some remittance. There are restrictions also, but there are limited facility also given to central bank, requesting from banks to maintain their foreign exchange dollar rate 223. But it is not happen, because the market is demanding. So therefore the alternative market, the rate is around 230, 240, now is 260, I suppose, right? 250, 260. So why people send the money to the banking scheme? And then there is a remittances issues has come, because why people are send the money to the banking system? Because you won't get only 203, 204 rupees, right? So there a lot of remittances can come from unauthorized manner, where you get higher interest, higher exchange rate, right? So therefore sometimes the bank compelled to increase their dollar rates to 230, 200 sometimes, right? Then central bank say no, but at a holding kill Haryana, so they give you a direction. So they said no. So then the new governor came, and he in fact released some money to the market to easing of this issue. He said he released a 50 million or something to the banks too, right? So just to as a short-term mechanism, central bank issues of dollar 50 million dollar to the markets to address these issues. Okay, so you need to understand certain things, right? Okay. Right now, what I explained to you, how monetary policy instrument impact our credit businesses, right? So what we've done, the policy interest rate reduction. Now the moment you have the policy interest reduction, that means the lending rate has come down. So the lending rate is now very cheap. Now as a result of that, a lot of people borrowed and invest their money for what? Export and import. So that is why our import is gone up, right? Because people who are using the low credit to import items, they're using their local money, buy dollars and imports. Okay, so then this entire exercise was not happen as we expected. So therefore what happens, central bank increase the one way is the increasing the inflation rate, as well as the, now you noted that we have not import anything, right? But our deposit gap එක මොකක්ද? Right? Trade gap import is more. If you really look at it, you noted that the last figure which I show you, right here. Now, how there is a restriction, how the import is increased. Right now, you understand. I think you understand. Right now, reducing the interest rate. Another important factor is people use the low credit and export. Uh, import items, right? So that is the one reason they have said the how import is increased despite the fact of more restrictions. Understood the monkey I will explain again. Hari, understood the Terunada? Abuda? Right? Are you clear now? Right? Krishanta? Okay.
Yeah.
Pinto? Chamaka?
Okay.
Sure, right? Okay, now අර නේද මාකරි ඩවුට් එකක් තියෙනවද මං කිව්වේ වල පැහැදිලිනේ right නැත්තම් අහන්න right Now I think you had an idea about so what happened was changing about the policy rates, right? So good. So these are the monetary policy instrument where you can there are, I told you, there are some these are something called the quantitative instrument, but there are some qualitative instrument also available for control the lending. So I will touch those things under the regulatory aspects, right? Okay, now that is what I want to share with you, the monetary policy instrument. How can you use these monetary policy instrument in to monitor the credit? Okay, clear? Right. Now we move into the next set, that is basically we call them as the right bank regulation. Now, how bank regulation facilitate the activities of lending, right? Now, the most central bank, as you are well aware, the most central bank basically introduce a lot of regulation for the for smooth functioning about the bank as well as the economy. So what are the main regulation introduced by the Central Bank of Sri Lanka? That is what you call the minimum capital requirement, minimum liquidity requirement, regulations on credit operations, and then you have a corporate governance. Those are we call the main regulation. I think in I think the in your syllabus, I think corporate governance also going to cover, right? I am not going to discuss in more detail, but I'm going to touch how the regulator impact the credit businesses, right? Okay. Now, so there are many rules and regulations introduced by the central bank. These are the core main regulation which really impact the credit businesses, right? Now, other than that, there may be a regulation pertaining to a related party transaction. There may be a regulations with regard to money laundering, regard to abandoned property, with regard to share ownership, with regard to branch opening, acquisitions, and then prohibited scheme, deposit insurance, maximum limit of foreign borrowing and things like that. There are many more regulation. But what we are going to discuss only a certain areas. Okay. Now let's look at it. How regulations on credit operations, right? What are the rules are available? Okay, the central bank regulation pertaining to credit operation. So rules in central bank regulation mainly in two areas. One is the management of NPL, and the second one is the management of loan or maybe credit concentration risk, right? So first regulation with the management of NPL risk, and the second area, the management of loans, or sometimes we call credit concentration risk, right? Those are rules and regulations where the regulations are there to control the credit operation, right? Now, under the management of NPL risk, the central bank have the regulations about NPL identification, reclassifications of NPL as performing loans, suspicions of interest receivable on NPL, loan loss provisions, disclosure of NPL ratio. Those are the regulatory aspects uh, taken by the central bank with regard to credit operation, right? These are impacted to your credit businesses. That's what I'm going to touch on these, right? Then there are another one we call the management of loan risk. So credit concentration. Some of the things we discuss and the qualitative aspect comes under monetary policy. So touch here. Now one is loan to value ratio, mandatory lending, maximum amount of accommodation, margin requirement. So we have a lot of things to discuss, right? Margin requirements. When you open LC, you need to keep a margin of 100%. Now they have taken out. So these are impact your credit business. LC is a credit, right? How certain rules and regulations introduced by the central bank impact your credit business. And of course the central bank, why they have introduced this regulation. Otherwise, if you have a more credit and more asset, it's create the ultimately may, if you don't have this regulation, there is a possibility of creating what we call them as bubbles, right? It may be a asset bubbles. That asset bubbles mean credit bubbles, right? Because credit is basically contribute to the asset, no? So there may be a, because of high credit, and there may be high increasing assets, so there may be asset bubbles. So you know what is bubbles? Bubbles mean there's any moment bubble can whatever burst, right? So then there's a loss to the economy. So therefore, we have a regulation aspect. We look after the credit. Okay, I think now you have an idea about little bit of these factors. Okay, now what we are going to discuss? We are going to discuss one by one little very your credit people maybe discuss all these things in detail, but for you to give you an idea about, I will now try to explain one by one. Now, okay, first one, as a central bank regulation, the management of NPL risk, right? First, determinant of non-performing loan. So how you NPL and what are the factors? Now they may look at it from the NPL ratio. Now say appropriate, you need to take some remedial strategies should be established to review the recover the credit. That is important thing. Every bank, otherwise they may maybe have a big problems, right, with regard to credit operation. Now what are the strategies? They may use some of the strategies called restructuring of the facility. Now you have enough experience during these days because of the pandemic situation, the restructuring the credit facilities, then rescheduling of payment, right, adequate provisioning, all are strategies you need to adapt, right? So with all these issues, okay, right? So why management of NPL risk is important, right? So you know the safety and soundness of both banks and the banking system, as it is a major source of direct losses and insolvency. So therefore NPL high, so that means increases the both the cost of banks and intermediate cost, and then funds available for grants loans are impacted, right? So if you have a high NPL mean what happened? So there's no money to grant for the loan, right? So what are the reason you think what are the reason you think the higher NPL, right? Just why you think the what are the reason for higher NPL, right? Okay, there are enough reasons, right? Maybe for inefficiency with poor governance and have a credit culture. So excessive credit concentration, maybe some certain factors beyond your control, right? So lending to low income borrowers, that's the banks are facing, right? Because we have introduced a moratorium system, and we have a problem with recovering these loans, right? Even though we have some systems, right? Because whatever the scheme introduced by the central bank and the government, the recovery part is whose responsibility? Huh? Whose responsibility about the recovery? Is the bank. If your bank, if the central bank feel the bank is not proper carry out the recovery process, they may not pay you, right? All these Saubhagya systems and all. Suppose the bank need to follow the normal recovery process, right? So that is why because of that also recently I think you may aware. In addition to the strategy plan, in addition to the BCP plan, in addition to the succession plan, recently central bank introducing another plan. How you call that plan? It has to be implemented from next year. Uh, the uh, the the bank's asset base is 1 trillion. You have to implement June from this June, and the other banks need to be introduced next year. How you call that plan? There is a name given. What is that plan? Huh? Done right? Huh? We call them as a recovery plan, right?
The
It's a new
banks.
plan introduced by central bank. New plan introduced by the central bank. So all the banks need to be prepared. That plan we call the recovery plan, right? Recovery plan, right? So they have sent you a guideline. What are the key areas to be looked at it, and they are going to monitor. You need to provide. You need to prepare and get the approval. First, you have to approval from your board of directors, and then you have to get the approval from your central bank, from the central bank as well, right? Okay. So now I think there is some small disturbance that's coming. Somebody can unmute, mute please your phone, right? Okay, thank you. Right. Then we look at it, having understood. Okay, first, as I explained to you, why we need to manage NPL is important, right? And why we manage loan or credit concentration, right? Because banks, they are a general tendency to concentrate a large good borrowers such as wealthy investors and cooperate for the purpose of reducing the loan administration cost, right? Usually what happen, bank willing to give loans to customers, right, who pay their loans as well as a bulk amount, right? Now you may have an experience with now who people you are giving for small customers, and think about the administrative cost, right, is a huge. So therefore there is a tendency bank used to go for give try to give loans to big good customers, right? And as a because if you go like that, can be happen even give more loans to specific economic sectors, right? And the real estate, tourism, so that may create certain bubble, right? So we have issues about giving more loans to the tourism sector, the real estate sector. So there may be a issue. So therefore, central bank intervene and come up with some regulation when you're granting loan. So they come up with administration or concentration risk management. Right now, first we're going to look at it, the non-performing loans. Now you well aware that in identifications of non-loans, of course, you are well aware about the loan situ of CBL direction. You non-forming loan is a loan that is default or close to being in default, right? So non-performing, when payments of interest and principals are past due for a certain period, we call them as a non-performing loans, right? There's a directions given in the central bank with regard to identifications of these type of loans, right? I think you may have a better idea about type of loans and how you categorize your loan, right? So loan category, special mention, substantial, doubtful, losses. That I don't want to explain much more on that. Then monthly repayment loan, it is from 3 to 6 installment. We call them special mention, and 6 to 12 is substantial. Then 12 to 18 is doubtful, and loss categories 18 and more. And these are some of the categorizations of a loan. Now, the important things here is the reclassifications of NPL as performing loans. There is also some sort of a regulation is there in your uh, in when you classify those non-performing loan as a performing loans. Now, you know, there are two methods now. Now, reclassification occurs when an NPL is resolved with repayment or rescheduling with no repayment terms. That's, I think you may aware what is repayments or rescheduling, right? Okay. Now, reclassifications of non-performing loan as performing loans. So bank shall reclassify NPL as a PLE if interest and principal in arrears are paid by the borrower in relation to classified NPL. So there is no issue on that. But when you look at the reclassifications of reschedule loan, NPL as PLA, there is a procedure to be followed. So therefore, what happened now? In the case of repayment loans, all areas should be repaid in full. Then therefore, no problem with putting under the performing loan, right? The issue is not come there. So issue is coming from reclassifications of rescheduling loan as NPL as PLA. So there, of course, the central bank according to their regulation, they tested what you call a performance testing period, right? Now, once you immediately you are not putting to the performance category, so you need to look at it whether the rescheduled loans payment pattern, right? A performance testing period is usually we call them as and applied in depending on the prevailing NPL category before reclassifying as a performing loans. Now, say for an example, the performance testing period is what they're expecting. The performance testing period is intended to ensure that the loan or taken by the borrower perform during the period before they treating back in the normal as a good customer, right? I think you understood that part. So therefore, suppose there is a things called, even though he paid, he look at it whether his rescheduled loans have continuously paid, and then the loans comes under category under special mention. So after 90 days only you are putting to the NPA. Till such time you considered as an non-performing loan. If the category is under substandard, you reschedule it and you need to wait for 180 days to consider that as a performing loans, right? It's the loss category if the reschedule it, so you have to consider that as a performing loans. You need to wait for 360 days. Till such time, what happened? So you may consider it as a NPL, right? I hope you understood, right? And this is because all these classifications, so what happened is impacted your your P&L, right? So that means it's impacted you have to provide provisioning for these things till such time you converted to PLA. Okay, right? So therefore, reclassifications occurs. There are two ways. One is you can settle your immediately, and or otherwise, right, have been subject to rescheduling, right? The principal amount or interest amount would be eligible to get a upgrade to the PLA category only after, as I mentioned, specific period. That period may be, suppose your rescheduled period at the time of special mention, so you need to wait for 90 days. Your rescheduled loan happened during the substandard category level, and it has to wait for 186 like that. Okay. Now, in the case of bank grant new loans, suppose sometimes rather than rescheduling the loan, some bank grant new loans to the recover, right? And regularize the NPA. So the new loans also should be classified as NPL subject to above testing period. Whether you are giving a new loan or rescheduled loan, the procedure the remain same. Clear? Any questions on that? Right? Any questions on that? I am thinking whether you have done some sort of a credit businesses, right? You have done credit diploma in credit management and all, right? Harida, any
Yes,
Chamatka
sir.
is
I have
you
a
have an
question.
issue?
So, is that mean
Yeah,
that, let's say, loan that is in special mention category, which is in NPL, we reschedule that loan. Then, let's say today we reschedule it. Then, for a
yeah,
90 days periods, even the customer is paying it on regular basis. Still, we
yeah.
classified it under NPL category, no?
Yes, correct. Now that we want to see whether you again, you can go to again, now you do it, and suppose you are not paid for tomorrow,
Yeah,
right?
right.
Only one installment or he paid, right? It is no point chamat, right? So that is what you call performance testing period. We call them as performance testing period. We want to see whether at least they pay continuously couple of months. Otherwise, again, you need to put into the loan. No point of rescheduling. No, that is chamatka.
Yes, sir. Yes.
So performance, we call them as a performance testing period, right? ඒ කාලේ තුලදී අපි බලනවා මෙයාර ගෙවනවාද කියලා. නැත්තම් එකක් ගාලා ආපහු ඒ තත්ත්වෙට එන්න පුළුවන්. there are enough situation like that නේද? ආපහු first එක ගෙවනවා ආයෙත් දෙක තුන ආයෙ ගෙවන්නේ. අන්න එක වළක්වන්න තමයි යම්කිසි කාලයක් දෙන්නේ. We call them as performing testing period, right? That period we call them as performance period. Okay, so then the next one.
At the time of performance testing period, the recovered interest also in the suspense account, sir?
I didn't get at you, Puta. You asked from me something?
Yes, sir. Yes, sir. At the special mention period,
Yeah.
At the performance testing period, period, the recovered interest and capital also in the suspense account, sir.
No, I will touch
Within-
on that. There is a separate one. I will. There is something. I will address that one. There is a suspense of interest receivable on NPL. I will touch on that. Right? Okay. There is another regulations we call
Okay, sir.
suspension
Okay, sir.
on interest receivable on NPL. I will touch on that. Right? Okay. Suppose there are two things now. Now then, you write off a non-performing credit facilities. So that is a very usually the our credit people and the bank credit, especially the risk management team as well as the credit team, credit unit, credit subcommittee or board of directors. They don't want to write off non-performing credit facilities, no, so they don't take some action, right? So how can you can they write off? Can bank write off the non-performing credit facilities? Yes or no?
Yes.
Yes, yeah, they can. But then usually go to the let's go to the board of directors. Usually it has to go to the board of directors to approval, right? So usually they won't give. So then a well-designed, you must have a well-designed board approved policy, right? If how you handle approach, authority, accountability, negligence, and inappropriate follow-up, independent review, and audit, etc. So you must have a clear policy there for write-off the non-performing credit facility, right? So there's a well-established policy who what sort of action you have taken. All the detailed informations need to be given to the board, and then only the board will take a decision whether they consider it's a last resort, right? Usually what happened, that shows something, though nobody is want to put in that, because suppose the credit DGM there, so and say DGM recovery value there in your bank, there's a DGM recovery. The moment you say send these write-off for non-performing credit facilities, and that indirectly show the inefficiency or incapability of the DGM recovery, right? So because then they both say Why this bugger every time they say non-performing write-off? So that they have not done any job to recover, what action they have taken like that. Therefore, he also a little bit of reluctant. She also have a little bit of reluctant sent to get the permission for write-off. And also the board is not even giving, they always pressurize it, try to get that money because that's the money, that's a net profit, right? Okay, so it's not so easy job, but can do, right? Now, having understood that, now we move into suspicions of interest receivable on NPL, right? Now bank should suspend interest income receivable on loans from the data a loan is identified or classified as NPL, right? Now the bank should suspend interest income receivable on loans from the data the date a loan is identified as a classified as Npl. So you need to put it separately. All interest both accrued so far and receivable in future should be credited to, there's a separate accounts we call interest in suspense account. Interest in suspense account, right? Then and debited to what account? Interest receivable account NPA, right? So you need to have two entries. So in order to avoid such interest income being taken into bank income and accumulated in loan assets, right? I think the one student asked that question. So you cannot take till such time, right? You need to put under separate account, that is what you call suspension of interest receivable on NPL, right? Now whatever crediting of such interest to the loan account is permitted only in the case of OD and credit cards where intent, right? Is interest is charged or accumulated on some compound basis, right? Okay, so we can consider that only with some OD and credit card. So otherwise, what happened? All the interest accrued, right, from the date and in advance classified as a non-performing accounts, loans need to be credited to the interest in suspense account and debited to the interest receivable account NPA, right? I think now you have I have answer to your problem, right? Okay, the one girl has some student.
Just
Right. Okay. So right
Yes,
now
sir.
we move into the loan loss provisions. Right now, another area, because those are important areas, because all this credit regulation impact your credit business, right? Okay, why NPA provision is important, right? Now the bank should maintain a general provisions, right, and backed by some provisions as per certain rules and regulation and some accounting standard. So the provisions mean allocations of income of bank in advance to cover estimated asset losses possible in the future, right? Okay, so there are two types of loan provisions, right? One is the general provision and the other one is a specific provisions. That of course I don't want to mention all these things. And the specific mention is no provision usually, so substandard 20% except for credit card, and the doubtful is 50, and the last category is basically you put it as the 100%, right? So that loss loan provision is need to be addressed. Then the issue comes here, the disclosure of NPL ratio, right? Right. So it is not there. Something about the impairment I have mentioned somewhere here. Right, it is there, right? I will address that during that period. Right. Then you talk about the disclosure of NPL ratio, right? Now, according to the central bank, so all the banks needs to be disclosed the NPL ratio, right? Now you know how to calculate the gross NPL ratio. So therefore, you may look at it estimated as a total NPL as a percentage of loan book, right? Whether performing and non-performing is used as a prudential ratio indicator of the realize of the credit risk of the bank. So that NPL will tell you the credit risk you are facing, right? So basically the NPL is displayed with gross NPL ratio, non-performing loans and total loans advances, and the net NPL ratio, you deduct the provisions and then you get the net NPL ratio, right? Now, these are the some of the important things about the NPL ratio, because it's a some indicator of how you prudentially manage your credit risk, right? That is why central bank need to express. Now let's look at it, the non-performing loan, Sri Lanka with the banking category, which took place in up to this year 2021, right? Okay, so get some idea on that. And this is the non-performing loan percentage, and this is the important thing, right? So NPL ratio decreased to 4.8%. Right now, the total NPL is in the during July is around 7.2 billion. So that's something. Something is little heavier, right? Something heavier. So if you look at it, the 7 billion, you look at it from the category wise: special mention, substandard, doubtful, and the losses. Now you noted that every time, now there is a peculiar thing. Now what we have noted that now you look at these columns, there are special mention, substandard, doubtful, losses. Yeah, you noted that your loan losses category keep on increasing, right? So you, once you as an maybe credit administrator or the person you in charge, so to just don't look at the ratio. Now sometimes you say our ratio has come down, so everybody is happy, right? Your NPL has come down, say your bank. Now last month NPL ratio may be 4.8, right? Or maybe 4.9. Now this month your NPL ratio has come down to 4.7, right? So are you satisfied? Yes, to some extent you are satisfied, right? You know how to reduce your NPL ratio, right? There's a tricks of doing no. But rather than that, you may look at it. What is the transition? Now you look at it from the NPL ratio, right? From 2000 June, July, even for figures June and July. Now you noted that the loss categories keep on increasing, right? And you look at it, your substandard categories keep on increasing. Compared to with this month, what is the next month substandard amount, right? So that's the best idea. Though that means you have not much follow up. Suppose your special mention category is gone now. Next year, next month, right? It has to be done in monthly basis, no? Suppose if a weekly basis is good, at least you've done in monthly basis. That special mention category, large portion goes to the substandard. That means, so in your early stage, you have not taken enough adequate steps to control this credit recovery, right? Understood. Now you look at it, the substandard and how much has moved into the doubtful. From doubtful, how much is moving to the loss? If the loss is keep on increasing, so that means chances of being recovery is very less. Now I think you may aware. So what is the cutoff point? You think you can recover the loans, whether gone to the doubtful stage or the loss category, or at least you need to be stopped from the substandard category, which you feel the cutoff point, right? If you are a good recovery officer, you need to at least try to cut off at the substandard level, right? If you go more than that, it's very difficult to recover, right? So that is why we need to analyze all this information, right? Okay, I think you have an idea on that. So now we move
Sir,
into the,
during
yeah,
the period moratorium given,
yeah, okay,
sir, excuse me,
yeah, go ahead.
during the period 2020 and 2021, the moratorium given. That is why the special mention and substandard maintain in same level or low level. That is the reason, sir.
That's also reason because
Moratorium.
yeah, that's also reason. But what I'm telling, not in that issue, yeah, but I'm overall telling, if you are going to look at it, your NPL, you need to look at it, the quantum move to the other category, right? What you said is correct, but what I am telling, as a credit officer, what you need to look at it as a recovery, especially. So what sort of quantum you are moving from special mention to substandard to doubtful, like that? What is the amount that indicate you we there's something we have not done, we have not attended to certain some loans, right? That is why quantum may be shifting to the next one, right? You try to reduce moving quantum this month to next category, right? So that you get an idea about. So whether your basic control mechanism is effective or not, right? Okay, so now we move into the next part of the credit, managing the credit concentration risk, is what you call the management of loans and credit concentration risk. So there are, of course, one factor, the maximum amount of accommodations, right? So so in this regulation, accommodation is defined to overall on balance sheet and off balance sheet credit exposure and investment excluding the bank investments, right? And we have identified there are two layers of maximum limit on total accommodation. So we can divide it into two: accommodation, customer-centric maximum accommodation, and bank-centric maximum accommodation. I think you understood how much of loan you can give it to a single person. So we call them as, there are two types on that. We call them as customer-centric maximum accommodation and bank-centric maximum accommodation. So, okay. Now, what is customer-centric maximum accommodation? Now, the customer-centric limit, we call it, is usually stipulated as a percentage of the regulatory capital base of each bank, right? So usually the customer centric limit is stipulated as a percentage of the regulatory capital base of each bank, right? So it has four limits, right? It has four limits like this, right? Okay, the first one, 30% of the capital base you can give a single company or public corporation, firm, or a person, right? So remember, there are two types of accommodation. One is customer centric limit as well as bank maximum accommodation. So the first one you took as an example from the bank regulatory capital base. From that base, 30% you can give, right? And then the next level is next limit is 33%. Now the 33% of capital base you can give for an individual or close relations or company in which he has and substantial interest, or maybe you can give it to a subsidiary, holding company, associate company, or subsidiary of a holding company. So that you can grant 33%, right? The third category is what you call the 40%, right? It's called the 40%. And the fourth category is, we call them as a 36%. Now the 36% of capital base on score assessed by the bank rating. Now your bank also having sometime you have the your own asset scoring model. So based on your scoring method, suppose your aggregate score come to basically between 6 and 8%, right? You may grant only 36% of the regulated base. Suppose your credit score method, credit bank rating method scored around 3 to 5%, you may grant 40%, right? And that is what the central bank directions is talking about, right? Those are the four methods available, right? You can go up from 30% to 40% based on what? As a regulatory base, capital base, right? So that's a one method. So the second method we call the bank's centric maximum accommodation, right? So bank centric maximum accommodation, you can go up to 55% of total outstanding amount for accommodations of above categories, right? So that you can go based on the your bank categorize according to the bank you feel it can give, you can grant up to 55%. That's the regulatory aspect. So that means, so accommodation, so through the accommodation what happen, you are controlling the single borrower exposure limit, right? Okay, so that is the one point, you control the credit, right? Then the next one is what you call the loan to value ratio. Now, loan to value ratio is a very much a prudent regulation. Now, these days, the central bank is heavily use this method, that is loan to value ratio. Now, what is loan to value ratio? Is a cap on a loan in proportion the face value of a security is taken as a collateral for loans, right? Okay, so why what is the purpose of introducing the loan to value ratio, right? Because that limit your lending capabilities. That is sort of a some sort of a control taken by the central bank to release more loans to different sectors, maybe, right? Now, intent here to limit credit to certain economic activities, right? So why we have the loan to value ratio? What is the intention? The intention to limit the credit to credit to the certain economic activities as well as customers, right? Now, what is the basis? Now that can be done on the basis of various prudential concern. Now, on credit risk, such as it may can create credit booms and unhealthy business activities, right? So therefore, you may apply sometimes a loan to value ratio for such incidences, right? And the differentiated of LTV ratios for same loan product, right? So can be depend on the category of the borrower, right? Now, same product, but LTV can apply based on the borrower, right? Now, say for LTV ratios for vehicle, now we have a separate LTV loan to value ratio for tourism business, mass, personal use, and right. Okay, sometimes some people are use a loan to value ratio as well as loan to income ratio, right? And that also imposed to curtail credit expansion to risky customers and activities, right? So, so therefore, thereby we can control individuals borrowing, right? Okay, so the same thing we call the mass with the loan to value ratio. I think you may heard about haircut, right? What is haircut? What do you mean by an haircut, right? Now, in finance, what you call by an haircut is a percentage that is subtracted from the market value of an asset that has been used for collateral, right? So that is what you call the haircut. So the size of the haircut reflects what is reflecting, and it is the pursuit associated with the holding that assets. Now, so this is very heavily used in the pawning business in Sri Lanka. So with the respect to haircut as the LTV, we had a bad experience. We sometimes during the maybe 2, 3, 4 years ago, right, with regard to pawning business. Now, as a result of that, the central bank may introduce some activities. So when you're granting, when you're giving advances to pawning, so that is the maximum percentage they can go in pawning. Can anyone tell me what is the maximum percentage you can give advances to loan? Anybody? Right? Nobody. Right? Can anyone tell me what is the loan maximum amount, the LTV when you're granting advances to pawning? What is the percentage central bank is telling?
Maximum 80%.
Are you sure? No. Now you need to understand this, Buddha. Right? Now central bank is selling 65 to 70. Right? That doesn't mean bank cannot give 100%. Now I am asking a question. Say your organization. So you are heavily involving in pawning business. Can your bank give 100% value loan to value?
No.
Why not?
Because of the price fluctuation.
Right.
To reduce the price fluctuation risk, they are keeping 20% provision.
Right. Good. Right. That's you come to a situation. So that doesn't mean you can't give. You can give, but what happened? The moment you give 100%, what is your provision?
Then provision will be a zero. If he gives 100%.
No, 100%. You have to allocate.
Yes.
Yeah, not zero, 100%.
100, yes. I meant to mean correct.
Okay, right? So that doesn't mean, usually the bank won't do that because we had enough experience. No, but that doesn't mean we can't give, right? Now we can give, but problem is we have to allocate 100%. We have to provide provision for 100%. So that is why banks are take little risk. Now you see today, now gold price is how much? What's the gold price? Some banks or even some finance companies, that is the now in today's context, right? I want to tell you in today's context, we have discussed 2 weeks back, I think, about the performance of loan by the finance companies, right? So their banks lending is increasing, right? Can you remember we discussed bank lending is increasing, whereas the loan portfolio of the finance companies is coming down. Clear? Why is that? What happened? Why is that? Why the finance companies loan portfolio is coming down, whereas the bank loan portfolio is a little bit increasing? What is the reason? So
bank rates are lower than the finance company.
Yeah, one reason is there is no
bottlenecks in leasing, sir.
there is no
bottlenecks in leasing, sir.
import vehicles, no. So that is the main their business, no, right? There are a lot of import reasons for vehicle, so therefore their main is leasing, no. So their income has come down, their portfolio has come down. Now as a result of that, what they are now concentrating, now they are
pawning business.
Pawning business, exactly. Very good, very good. That is why you can you remember we compare the pawning businesses, right? Their pawning business is now increasing, right? Because there's no any other alternative methods. Their credit business are increasing. Now the people banks who are involving in credit in pawning. So you need to look at what the businesses, what actions finance companies are doing, because there's no much option. They are going for pawning. Now you noted that banks are giving 70,000, 80,000. Some finance companies are giving
100,000.
110,000, 100,000, right? I think Ganesh, you are also from finance company, I suppose.
Yes, correct.
So how much you are giving?
We are giving for a 22 carat 90,000.
98,000. So I saw
That,
some advertisement is all 110,000 also, no?
oh, that is for the 24 carat.
24, right? Okay, whatever. I mean, but what is the bank corresponding figure banks giving?
Maximum 70 to 80,000.
Yeah, so that imaging the difference,
Yes.
that imaging the difference, right? So now that those are the areas. Something happened to the gold price. Now, according to the present situation, we can estimate that gold price not that come to a at least for next couple of 1 or 2 year, maybe till the economy recovered. Gold price may have some this rate, right? But suddenly it has come down. So imagine what happened to those companies, right? So they take some risks for that. So they are in, because there is no any other option, because and one way is people also having some issues. Now they're moving for because their income is not so much attractive, so therefore they may also going for a pawning, right? So we need to look at it that as factors as well. And then another measure we call the margin requirement. So this is another way you can control your imports, right? That is the policy requirement. We call the margin requirements. When you open the NLC, what happened? So you need to keep 100%, 50%, 200%, or like that the margin. So what is this directions we'll talk about comes under the uh, the LTV, also margin requirements. Now, remember when the new governor came, that was taken out, right? So margin requirement. So margin requirement also can be, you know, what is margin requirement? When you open an LC, right, before you hand it over the documents to the customer, you need to get a value of that LC value, cash deposit with your bank, right? So those are interest like SRR, no interest, right? Okay, so no interest. So what the customers are not willing to do that, no. So therefore discouraging importation, right? Now, despite all these things, import bill gone up. That's what we discussed earlier. Despite all these restrictions, import bill has gone up. So what happened then? That is one reason I have already quoted to you. So people use low credit, right, available in the market for buy dollars and export the business, having the import certain items, right? Okay. Then we moving to the next one, what you call the uh, the another important area, interested area, that is what you call the uh, mandatory lending. That's a very interesting area as far as the uh, banks are concerned, and this is intended to promote a delivery of credit to priority sectors of the economy in the national interest, and therefore it is a greater credit distribution policy than the bank prudence, right? Now you aware that according to already is there, the credit granted by licensed bank may not be less than the following percentage of the total loans portfolio. 10% you have to show is you are spending to tourism and the export sector, 10% for your agriculture, 5% for youth and women credit. Those things are there, and this need to be support to facility about the credit. So therefore, so you cannot concentrate on one area. There is some direction from government and the central bank. Whatever the loans you are giving, so you need to give these sectors at least some percentage. So that is what you call the mandatory lending, right? So therefore, you may be aware there is some now we discuss around 20% the government say to give it to the MSC sector and things like that. Okay, so there's a mandatory lending also there. So therefore the bank, whatever the lending portfolio, there are some directions given by the central bank. From your portfolio you need to give for different segments, right? Okay, so then we discuss about I'm not going to touch about the impairment or things in details, but according to the central bank direction, so IFRS 9 need to be implement. In fact, this need to be implemented during end of 2021, but actually it was postponed, right? Due to the fact that due to the fact that the Sri Lanka, we are all are facing certain economic crisis due to the pandemic situation, and the implementation of SLFRS May 9 is to be postponed to next year. I think now the central bank again here. So what is the important thing here? The in the IFRI, SLFRS 9 methodology. Now we are using for the methodology is what you call credit loss approach instead of incurred loss approach, right? So now SLFR9, the moment you grant the loan, you have to allocate provisioning. But in other methods, happen only you allocate. That's the difference, right? So main difference is that. So SLFRS require bank to provide loan losses and expected credit loss approach, right? But other method the central bank is using now, the incurred loss approach, right? I think you may going to learn all these method in details. I'm not going to touch, but I want to tell you the impact your credit businesses, right? Now, according to the recent statistics issued by the central bank, you noted if you're going for SLFR based reporting about your NPL, and if you are look at it, the provisioning of NPL asset, your normal, the central bank regulatory. Now you look at the difference, the ratio, how it increasing. Now from 6.8 to stage 3, mean there are loans in categorized wise in stage 1, 2, 3. So that's again you may going to learn. So entire loan NPL ratio, it is increased by from 6.88% to 8.2%. That means what happen if you are going for a IFRS reporting, right? So definitely your ratio is going to go up, right? So that means if you are going to NPL is going to go up. So what you are expecting to more monitoring or more control your NPL. So you need to take account when you're granting loans, whether you are going to give them a prime customer, whether you're going to give you a subprime customer, right? You need to look at it, your quality loan aspects, you're going to strengthen your regulatory aspects, recovery aspects, all things. But otherwise, what happen? NPL is increased. The more if you're going to increase the NPL, what happen? It is impact your bottom line. Then your private organization, they will, your stakeholders may have some worry. So there may be a restriction, there may be a withdrawal from your present positions, things like that. Okay, so therefore remember, so when you're going for an impairment on IFRS methods, so basically you need to allocate more loan facility, more provisioning, right? So
Excuse me, sir.
Yeah,
There is
sure.
a one doubt. Can you clear, please?
Sure.
Now, under this impairment approach, even if the loan is not in arrears, are there any charges to
Yeah,
service?
that is what they're saying. There is a do you have to allocate? You have to consider that it considered as a not paying loan. That one way is good. Now, if those are, I mean, so you are one way is you are prudently manage your NPA, right?
Ah.
So that means your one way is there is no any what you call the bank run situation, right? That means your bank is very much prudently bank can in that sense absorb any losses,
Ah,
right?
ah,
So survival in the market is very high. Now
ah.
what happened in 2008 2009, lot of banks was collapsed, no, despite the fact of
Yes, yes,
all these things, right? This
yes.
is the extra action taken after this all these 2008-9 incidents.
Financial crisis
Yeah,
after this.
more now we added more capital adequacy,
Ratios.
conservation buffers, loss absorption capacity increase. We
Yes.
lot of things too, right? Okay,
Ah.
so those are some of the things.
So then, as long as this loan portfolio is growing, this impairment will be increased automatically, even though
Yeah,
so.
but accordingly, yes. But again, once you receive, that means
Ah,
your profit is increased now.
yes.
So you have to look at the other side also. So
Ah.
suppose the money is comes, the profit is increased now because already
Yes,
you are
yes.
allocated for provisions there now.
Ah,
Got it?
yeah.
Right? Okay. So I
Okay.
think you will learn all these things in the separate credit administration. I've just briefly touched now how these factors impact your credit businesses, right? Okay, how to calculate, and there is a method of calculation, right? If I'm going to talk about impairment process, there is a calculation of loan loss provisions. There are two type of processes calculations: collective impairment, individual impairment, right? And how you categorize under SLFRS, how you categorize your assets in different way. Those things I think you are going to learn differently. There is some way of identify your classifying held to maturity, held to sell, and like that. There is a method, right? So you will learn all these things under a separate under credit, I suppose, right? But in what I'm telling is there is something like that. It's going to impact your business. So that's what I just highlighted, right? Okay, so then we have a parat execution, and then a very interesting story about the parat execution, right? Now the central bank has given direction, no banks to file actions, right? That's a separate thing. But top of that, the law also having now some sort of a contradicting issue, right? So we will discuss about these things next time, about the Sumudu Sanjeevani Nanakara case versus HNB case. Will of course have a big issue about the parat execution, right? So, and in fact, central bank also requested bank to not to execute any parata, right? So we'll discuss what is parata execution and what is the present situation, how it impact your credit business, and then we are going to discuss some of the liquidity regulation imposed by the central bank, how it impact your credit business, and then we're going to discuss about the domestically significantly important bank, how you identify them, how it impact your credit business, and then we are going to discuss about the credit ratings, right? Also next time. Okay, clear? So we will touch those things, and with along with this I will touch about the sustainable finance aspect, right? The natural environment factors, climate factors, how it impact your credit business, right? Okay, so we'll see you today, and we will catch you on next Sunday at the same time, 3:30, right? Maybe from after the first, we can start sometimes the full session from 1 to 1:30 to 5:30. That's only one class. I have 12 hours. Then I think we may do the balance 4 hours in a one session, right? With the break. Okay. So thank you very much, and we'll see you on next Sunday. If you have any problem, please bring that to the next class, right? Okay, thank you.
Sir, can I have your telephone number? I
Yeah.
have a few.
Yeah, not 77 864 202.
No 77
864
yeah
202.
20.
Right?
Okay,
But
sir.
if you
Okay,
have
sir.
not, if I not answer, please send me a SMS, right? I will call you.
No 77 864
202.
202. Right.
Yeah, you
Okay,
deduct
sir.
from 8, you deduct 2, then you get my number.
Right.
Okay.
Okay,
Right.
sir. Thanks, sir.
Thank you. Thank you.
Thank you.
Okay.